Well, hello everyone and welcome to Momentum channel. In this video, we're going to be talking about 7 high quality utilities stocks that are considered to be undervalued or reasonably valued at this time and have been providing their dividend income for many, many years. Let's get into it. Our very first pick is a company called Pinnacle West Capital, available with ticker symbol PNW. It has a very low volatility score of 0.26 when it comes to its beta. Beta is a measure of volatility, and a beta equal to 1 suggests somewhat of a similar volatility level as the general overall stock market. In this case, Pinnacle West Capital has a beta of only about a quarter of that of a 1, hence suggesting very low volatility. It has a dividend yield of 4.77% and has a dividend safety score of 70. Looking at the dividend growth history for Pinnacle West Capital, you notice that the last time that they increased the dividend goes back to November of 2021, where the company increased it by 2.4%. However, in the past 5 years, on average, they've increased it 6% per year. In terms of the dividend payment history, Pinnacle West Capital has been paying its dividend uninterrupted for the past 28 years. And it's worth mentioning that in the past 10 years, they have increased their dividend year after year. Pinnacle West Capital does pay its dividend quarterly, and it is paid in the months of March, June, September, and December. And in terms of its dividend payout ratio, currently we are looking at 63%, which is considered low for utilities, giving it a ton of room to continue to grow and increase its dividend for years to come. Looking at the past performance for Pinnacle West Capital Corporation stock, the 1-year return for this stock is down at negative 19%. 5 years return is at a similar spot, at close to almost down by 19%. However, if you look at the 10-year return for the stock, it is up by almost 41%. Our second pick here, talking about high quality utility stock, is OGE Energy. It operates as an energy and energy service provider, and it is available in utility sector with a beta score of only 0.36, which suggests very low volatility. OGE Energy has a dividend yield of 4.43% and a dividend safety score of 70, marking it as a safe dividend payer. They last increased their dividend in September of 2021, where they increased it by 1.9%. That being said, though, in the past 5 years, they have increased their dividend on average by 7%. OGE Energy has been paying its dividend uninterrupted for the past 27 years, and in the last 15 years, they have increased it year after year. OGE Energy also pays its dividend quarterly, and it is paid in the months of January, April, July, and October. And the business has a payout ratio for its dividend of 70%, which is considered low for utilities. Looking at the past performance for OGE Energy, the 1-year return for the stock is up 5%. 5 years return is showing to be at 3.9%, and the 10-year return for the stock is at 44%. It is worth mentioning that the stock price for OG Energy currently is hovering halfway through its 52-week low, hovering a little closer to its 52-week low price. As for the market cap for OG Energy, we're looking at $7.85 billion. Our third pick is Duke Energy, another utilities business with a very low volatility score of 0.21 for its beta. It has a dividend yield of 3.81% and a dividend safety score of 80, marking it a safe dividend payer. Last time the business increased its dividend goes back to July of 2021, where they increased it by 2.1%. That being said, in the past 5 years, they have increased their dividend by 3% annually. Duke Energy has been paying its dividend uninterrupted for the past 14 years, and in all of those years, they have been increasing their dividend year after year. Their payment schedule for their dividend is done on a quarterly basis in the months of March, June, September, and December, and it does have a payout ratio for its dividend of 74%, which is considered low and allows them room to continue to grow their dividend for many years to come. In terms of the stock return, the 1-year return is just fractional positive at 0.88%. The 5-year return for this stock is at positive 19.8%, and the 10-year return is at almost 51%. It's worthwhile mentioning that Duke Energy has a market cap of $82.97 billion. Our next pick is UGI. It's a utility sector business which distributes, stores, transports, and markets energy products and its related products. It has a dividend yield of 3.55% and a beta a score of 0.68, suggesting low volatility for this stock. It has a very safe dividend score of 99. And the last time they increased its dividend goes back to May of 2022, where they increased it by 4.3%. That being said, on average, in the past 5 years, UGI has increased its dividend 8% per year. They have been paying their dividend uninterrupted for the past 34 years, and in each of those years, they have increased it year after year. UGI does pay its dividend quarterly in the months of January, April, July, and October, and has a payout ratio of 52%, which is considered very low for utilities. Looking at the past performance of UGI Corporation and its stock, the 1-year return is shown to be down by about 14%. 5-year return is down by about 21%. However, the 10-year return is a massive 112.8% positive. Our next pick is Consolidated Edison, the ticker symbol ED. Has a very low volatility stock with a beta score of 0.20. It has a dividend yield of 3.47% and a very safe dividend with a score of 90. Last time that Consolidated Edison increased its dividend goes back to January of 2022, where they increased it by 1.9%. That being said, in the past 5 years, on average, they have increased their dividend 3% per year. Consolidated Edison has been paying its dividend uninterrupted for the past 47 years, and in all of those years, they've increased it year after year. They do pay their dividend quarterly, and it is paid in the months of March, June, September, and December. The payout ratio for Consolidated Edison is at 71%, which is considered low for utilities. Looking at the past stock price return for Consolidated Edison, the 1-year return is up 17.2%. 5-year return is showing to be up by 9%, and 10-year return is up by about 48%. Our next pick is American Electric Power, with ticker symbol AEP. Very low volatility again here at showing a beta score of 0.29. The dividend yield for American Electric Power is at 3.35%. It has a very safe dividend with a score of 81. And the last time they increased its dividend goes back to October of 2021, whereby they increased it by 5.4%. In the past 5 years, on average, American Electric Power has increased its dividend 6% per year. It's worthwhile mentioning that American Electric Power has been paying its dividend uninterrupted for the past 17 years, of which the last 12 years, they have increased it year after year. American Electric Power does pay its dividend quarterly in the months of March, June, September, and December. And it has a dividend payout ratio of 63%, which is indicated to be low for utilities. As for the past stock return for American Electric Power Company, the 1-year stock return is at positive 9% or so. The 5-year return is at about 29% positive, and the 10-year return is an amazing 137% positive return. It's worthwhile mentioning that American Electric Power has a market cap of $50.46 billion. Lastly, our final pick of the 7 high-quality utility stocks that are currently reasonably valued or undervalued is Brookfield Infrastructure Corporation, the ticker symbol BIPC. It has a volatility score of 0.60 for its beta, which is suggesting to be low volatility, and has a dividend yield of 3.24%. It has a dividend safety score of 65, still marking it as a safe dividend pair, and in the last increase its dividend payment for the amount of 5.9%. It's worthwhile mentioning that they have been paying their dividend uninterrupted only in the past 1 year, and in that year they increased it. They do pay their dividend quarterly as well, and it's paid in the months of March, June, September, and December. Given that in the last quarter, the Brookfield Infrastructure was recording a loss over the past year, they do not have a positive payout ratio at this time. As for the return for Brookfield Infrastructure Corporation, its 1-year return is showing to be down by 5.3%. However, its 5-year return is showing to be up by 104.6%. It's worthwhile mentioning that stock has not been around for that long. It was listed close to mid-2020, and the 5-year is not truly a 5-year, but rather the return since that being launched and added to the stock market here with ticker symbol BIPC on the New York Stock Exchange. As for the market cap for Brookfield Infrastructure Corporation, it's showing to be at $5.18 billion. Well, there you have it, folks. A quick look into 7 high-quality utility stocks that are currently considered to be undervalued or reasonably valued and have dividend payments that are perfect for those investors looking for a reliable passive income through dividend investing. Hope you enjoyed this video and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stock, growth stock, penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.